Hi, welcome to Forex In Four. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started. Good morning. Today is Friday, May 27th, 2011. This morning I'm talking about turning a negative into a positive. All right, and we're just going to start off here. I want to take a look at dollar versus yen here real quick. All right, we're looking at the daily chart. You can see dollar is weakening against the yen a little bit, but you can also see on the board here that there's some yen weakness versus Aussie versus euro. All right, pound's just about flat versus it. And basically, the reason why we're seeing a little bit of yen weakness in the market is because overnight in Japan they reported CPI data that was actually positive and not negative, which means that they're actually seeing a little bit of inflation over there in Japan. And as we know, it's been 28 months since the last time we saw inflation popping up in Japan. Now, the reason this is a negative into a positive is that we know what's gone on in Japan recently as far as the earthquake, tsunami, nuclear crisis. All right, what that's done is that's interrupted supply over there. Demand stayed steady. Prices gone higher. All right, it's unfortunate, but this may actually be one of the ways that Japan's going to break out of this economic malaise that has plagued them for the last 20 years. All right, we talk about they call it the last decade, but decade's 10 years. This has actually gone on for 20 years, where Japanese economy has been mired in stagnation. All right, so I hate to see things like tsunamis happen. Obviously it costs people's lives. All right, but the rebuilding efforts are actually going to help add to GDP, help get the economy going. It's sort of like a jump start that perhaps they're going to be able to shake out of this malaise that's plagued them for so long. So that's sort of how you can turn a negative into a positive, or perhaps look for the silver lining in a bad situation. So in Japan, we're going to see what's happening there. But the reason why, and we can look at euro yen here. You can just see that euro's moving up a little bit. But the reason we're looking at dollar yen is because dollar is very weak right now, and that has to do with yesterday's revised GDP figures. Came in 1.8%. We were hoping for 2.2%, so that's a big miss. All right, personal consumption figures were up 2.2%. They were hoping for 2.8%. That's a big miss. And then lastly, initial jobless claims came in at 424,000. They were expecting low 400s. That's a big miss. So you can see problems in the U.S. economy. All right, and yesterday was sort of a weird day because it was sort of a risk aversion day, meaning people were looking for safe havens, but they weren't looking for it in the U.S. dollar because we had dollar weakness. So you can see that sort of these risk themes are breaking down a little bit, and now we're starting to focus more on the fundamentals of individual areas. All right, we can take a look at Euro USD here. You can see Euro's bouncing higher. All right, it's up, just sat on top of that 140 support level. But this really is more of a situation where it's more about dollar weakness than euro strength than anything. Okay. And that's one of the drivers there. And we talk about China's influence in the market. We discussed it yesterday with regard to the Kiwi. We also discussed it yesterday with regard to China perhaps buying some of the bonds of these periphery pigs countries, and they should. But it's the kind of thing where China now wields a huge sphere of influence because of the massive amount of currency reserves they have. So they could potentially push euro way higher just to get out of dollars, and it wouldn't mean anything's changed about any of the fundamentals in any of these countries. So that's going to be something to keep an eye on. So this morning we've got some risk taking going on here. Okay, you can see that commodity currencies are higher. All right, but the oil prices are right back to around 100. We've got stocks flat to open, okay, a little bit higher. We're going into a long weekend here in the U.S., so Monday is going to be closed, and it's going to be a bank holiday, so you got people maybe squaring the books here ahead of that weekend. All right, and then a little bit later this morning, we're going to get some figures here. We're going to get the U.S. personal income numbers. They're expecting a rise of 0.4%, and personal spending numbers to go up 0.5%, but I'm guessing with the higher commodity prices we've seen earlier, that's probably going to be a tough number to hit. So I don't know that we're necessarily going to see that. Lastly, we've got the pound mixed. Okay, pound we can see here. Pound moving higher versus dollar, but that's again dollar weakness is happening. But people are concerned about the recovery in the UK. I just also wanted to mention the Swissy here. I don't talk about the Swissy enough because, believe it or not, even though the Swissy is a major currency, it's a very small country. There isn't a ton of news that goes on. It's sort of like gold. It's a proxy for risk, but you can see Swissy's at all-time highs versus euro. Okay, also all-time highs versus dollar. Okay, the reason that's happening is IMF suggested that perhaps they need to raise interest rates. So, okay, sure. I mean, the Swiss economy is doing fairly well. So this is really becoming one of the better safe haven currencies out there. So that's really what we're looking at. We've got the fundamentals are coming more back into focus. Okay, people are seeking yield for strong economies. I mean, we talk about Australia as being a risk asset because it's based on commodities. But if you think about the interest that you get in Australia, okay, and how strong that economy is, I don't necessarily know that I want to sell Aussie dollars if the stuff hits the fan. Okay, going into the safe haven currencies like the dollar just really doesn't look good right now. The U.S. economy is floundering, and it's going to be questionable to see if that can get back on track with the scenario we have going on in Washington, D.C. right now. So that's really what we're looking at here. Again, long weekend for Memorial Day here in the U.S., so banks are going to be closed on Monday. That'll be a little bit of a decrease in volume on Monday, but it doesn't mean there won't be good trading out there. So until next time, I'll be back on Tuesday for you. Good weekend, everyone, and good trading to all. As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.